When it comes to investments, getting into trading on the stock market can be nerve-wracking. I don't know about you, but Gordon, I never feel old enough to do it. It's a complex subject, but Gordon is here to get us started with some simple tips. So Gordon, what are some of the first steps to getting into the world of stocks?
Well, I was really excited to work on this episode because there's a lot of confusing aspects about the stock market out there. So we wanted to do an episode that basically just goes down to the basics. What is the stock market? How does it work? And the best place to get started is just kind of figure out what kind of a company you want to go with in terms of trading stocks. You have to get a brokerage account, or you can do it in your retirement account. It's easier than ever now with you can even get apps that are free, and you can trade just one share of stock. You can trade like $5, which is kind of cool. I remember when I first got into stocks, you had to be like a couple $100 minimum because you had these $10 fees every time you moved a stock. And so it kind of took away a lot of the profits you could make. Now, since the trading is free, you can really get started for $5, $10, $20.
Isn't it so interesting how technology has really changed what people are able to do when they're able to do it? Are there any things that we need to be watching out for?
Well, one thing is that right now, we actually talk about this in the show. 7 biggest stocks in the stock exchange is called the Magnificent Seven. It's kind of a fun little phrase that someone created. And the concern is that they get a lot of attention, a lot of media attention, a lot of hype. And they've gotten so big that if something happens with one of those companies, it can actually have a drastic impact on the entire market because they're so big. These are Tesla, Google, Nvidia, companies like that. And so before you invest in a company like that, which has so much hype and so much movement and fluctuations, really know what you're getting into because they're getting so much attention and they're so big that they could really drop or go up on just a daily basis.
There's so much attention on, okay, this is how you buy the stock. Okay, this is what you do with the stock. But what happens after buying stocks up?
Well, basically, you're just tracking it and just watching your stock and seeing how it goes. I think the biggest thing in the episode that I want people to take away is figure out your own risk tolerance. If you're not comfortable with seeing 10% or 20% of your money dropping or going up in a week or two and not reacting, you just need to kind of, be able to shut that out of your mind and understand that things go up and down. If you're not comfortable with that, maybe some other types of investments you should be looking at because it can change a lot. And some people get really nervous about that. And if it goes up a lot, some people get the opposite, where they get greedy and they start putting more money into it and money they can't afford to lose. And then that can create some problems for them down the road.
That's a good life philosophy. Figure out what you're willing to invest and not be mad about. Gordon, thank you so much. You always help make us a little bit smarter. And of course, you can continue getting smarter and you can find more tips on this week's Your Money. It's up on KARE 11 Plus right now.